some what are beautiful charts and see if they're still beautiful. All right, the first one would be, no surprise, Apple. So is Apple still a beautiful chart? Well, in general, Apple is a beautiful chart. Didn't do any damage last week, but acted. The market was too negative, and Apple participated for the most part. Monday, Tuesday, Wednesday, Thursday, and Friday. All these days were down. Okay? Now, notice what happened to Apple on Monday. Had a key downside reversal. All right? Let's add some volume to this and see if that key downside reversal day was a high volume day. Not particularly, which is a good sign for Apple. That Apple hit a peak at 279.01, filled its up gap from the prior week, right? Pretty much an iPhone 4 type of thing. It broke above this coil and hit its new all-time high at 279. Now, it's coming down to test its breakout point. This is key support right in here. 265, 262.5. If Apple breaks 262.5, I think Apple will probably go down to 240. So it needs to hold in here and needs to turn back up, and if it does, 282, 283 would be my next target. All right, next. Another beautiful chart. Now, Netflix has had an amazing run, as you can see. Hit its highs in mid-June, right, 128, and then again at 127.80. And last week participated with the market, but turned up on Friday. Now, notice that of the 50-day moving average and the trend line, it continues to hold, and these are accented so sharply higher, angled sharply higher, that I think Netflix will probably retest its high pretty soon, and that will tell us whether or not Netflix has a new up leg or a double top and is in dire need of a rest. So unless Netflix takes out 114.60, I think probably it'll test 127, 128. All right, that's another beautiful chart that still looks pretty good. How about NTAP in the cloud computing space? Great chart, still looks excellent. No real damage done last week. Tested the 20-day. Still looks like it has some higher prices to go. However, if NTAP can't rally off of here, gets hung up in the 41 area, breaks last Friday's low at 38.87, I'd be really careful. It could come down to this average in a hurry, and before you know it, it'll be testing its major long-term trend line and the 200-day at $32. Remember, there's a huge gap in here above 33. So NTAP is a tricky one. I'd be really careful with NTAP. Plus you have the momentum. I mean, MACD still looks pretty good, but stochastics are looking like they're struggling, so I'd be real careful there. And one more from the beautiful chart category, CREE. Now CREE doesn't look so beautiful anymore. CREE peaked in April, came down, now has what looks to me like a bearish wedge, and it looks to me, unless it can get back above 71 and change, it's probably going to break its 200-day and head down towards 40 and low change. Be very careful with CREE, and it has a negative MACD. RSI is telling me to be careful, and so is stochastic on a daily basis. So the beautiful charts, some of them still look great, but others look like they've given up, and there are a lot of folks in these names. So be really careful. Once they decide they don't like them, maybe quarter end, look out. Could be very difficult. Now let's look at some ugly charts, and ugly they are. Walmart, surprisingly ugly. Now what's going on with Walmart? You know, this is a major deal here. it looks awful. All right, and let's put up a weekly. You'll see how awful this looks. It's a daily. Weekly. Weekly looks terrible. It looks like it's going to take out this support line, which it already did, and it's headed down here somewhere. $46 to test this, and then before you know it, it will have retraced its entire up move. So Walmart, I don't know whether it's the consumer is just totally shot and Walmart is really going to take it on the chin, or what, or it's just a function of economic growth or deterioration, as it were. But this is a very ugly chart. I wouldn't be going anywhere near Walmart anytime soon. And this is another one. I did the chart analytics on this on GE on Friday. That's a pretty big top in GE. So GE, I don't know, business, it's telling me the economy's not so hot. It's telling me that financial reform is not going to be good for GE. Whatever businesses GE is in look like, to me, based on this chart, that they're all going to suffer a contraction in growth, a contraction in profits, a contraction in demand. Okay? That's GE. Another ugly chart, which we're all familiar with, which made a new low on Friday, largely because of the potential for a hurricane in the Gulf, which will eat up more capital for British Petroleum. And if we put up a weekly, I mean, you can't go back far enough. Let's see, this was 34.67 in January of 03, and, well, we're way below that. Would that be right? 34. Yeah. So, I mean, you're in the 27 range. You know, I looked to me like it'd go to 24 early last week when I put it up on the site. So I can't stand in front of that falling knife under any circumstances, but it is an ugly chart. How about this one? Microsoft. Looking pretty ugly to me. Yes, you had this is the 2009 rally. Double top 3150 in December, 3158 in April. So the parameters of the double top, 3150 down to, let's say, 2750. That's $4. So 2350 is the measured move, which isn't far from here, but nonetheless, it's an ugly looking near-term chart. It's trading. Last week it bumped up against its cluster of moving averages, the 20, the 50, the 200 day, and acted very poorly. So looks to me like at the least 2350 is where Microsoft's going, and all the attendant oscillator action looks lousy. If we put up a weekly, let's see what that looks like. Well, that is a weekly. Looks terrible. Looks absolutely terrible. All right. That's the daily. So it seems to me that if it breaks 2350, it's going into 21 to 20 in Microsoft. All right. One more, and we'll let you go. 41 minutes. Better than 50. Okay, RIMM. Yeah, disappointing earnings. Lots of competition. iPhone, Droid, you name it. But nonetheless, ugly chart. Broke 54.30. It's November low. You have all this action now is distribution. Right? All of it. Putting pressure on this, broke down. You have a gap here, 48.80. You have another gap, 45.50. Looks to me like we're coming down that RIMM has a ways to go in the downside.